Well, financials rather, not just banking. Okay, let's zoom in. Yeah, this is kind of what I was kind of expecting. Last Friday, let me see, 1, 2, 3, 4, 5. Last Friday, we had not like 2 days ago, but a Friday before we had Mr. Powell come up and or what is Powell I think his name come in and say that the Fed's going to support basically everything, which makes sense why the market has been kind of teeter-tottering out with just going higher and higher and higher. Let's kind of look at the ES just so I can give a better explanation because banking's going to have is going to I'm going to show you what I'm talking about in just a second. So 1, 2, 3, 4, 5. So this is when Jerome Powell came on and said basically that the Fed is going to support whatever they need to do, and I mean a massive nice day. Then it literally hit target of 4538.87. 1, 2, 3, 4 days in a row. So basically every day last week we were at our target. Now the last Friday we popped up. So this upcoming week I would not be surprised if we come back to reality just a little bit and maybe even test the 786 way down on 44.65, as that's where we were right before Jerome or Mr. Powell basically said that the Fed will just keep printing money and keep supporting the markets and keep the rich getting richer and the poor getting poorer. So with that being said, now just it seems every time the Fed basically says they're going to support no matter what, we have beautiful runs. So we might just come down to the 44.98 and then voila, within the next 2 weeks we might be at 45.90. So just keep that in mind. Now let's get into banking. Or financials. So this would be kind of my telltale. Let's kind of look at all 10 of the stocks instead of just one. But this down here would be a nice defined risk. Anything really below, I would give it even a little bit extra. More or less that 40.47 right at this area right here. And that'll be my break point. That'll be the point get out. But anything, if you want to be extra aggressive, getting in here would not be a problem. I would like to see it kind of, because here's our short-term run, right? So our 50 would be here. Our 618 is down at the 40.47. Our 786 is at the 41.2, 41.26. So anywhere between the 618 and the 786 would be a decent buy. Now on the bigger term, we're at the 382. So, and that's kind of like a double bottom right there. So kind of play this upcoming week. Like I said, with the Fed ready to support basically everything. Banking looking pretty, I mean, it's not too shabby. The numbers came in kind of horrible on Friday for the jobs report, which I guess that could be even more good news for the Fed to keep on supporting the markets. And let's not forget, dividends came in last week for for a few of the banks. So it's almost we almost guarantee the banks were going to kind of fall in just a little bit for the dividend risk, whatever. But again, if you're aggressive, this would be a beautiful place to go. But just remember, we could go all the way back to 39.96, and then find support for our next leg higher. KKR. Are we above it or below it? So we are 4 cents above the 100% mark right here from the larger trend, or let's see what trend that is. So the 100% mark would be here to here. We are above that. However, the much larger trend, which is this one right here, the 127, we're above. Well, basically, we're above everything with KKR. So, I mean, if you were extra aggressive, I would buy here. I don't like how that looks. The Friday move, since well, kind of. It's nice because we broke out. So we broke out of this little range right here, but then we immediately got rejected. So that's a little um, unmotivating, I guess would be a good word. However, as long as we stay above really the 6.3, 6.8, where on last Wednesday we bounced off of that level. As long as we stay above there, I like it. If we can really stay above this 100%, the 64.40, then I am enjoying this even more. So for our next target would be, because we haven't it's been it hasn't really been that long. It's been about a month. So I would also give it a little bit more jiggle room around, maybe for the 65.46 up to these little clusters of numbers, and then try to retake after, maybe about 2 weeks, 3 weeks from now. But it has to really be convincing that it breaks out of this basically range of the 65.04 area. Let's talk to Chuck. Um, yeah, not really what I would like to see at all. We had our Friday Powell move right here that brought us to 100%, and then basically we got destroyed and taken down. But look where we are. We are at the 618. So it didn't really destroy too bad, right? It's not a pretty, but if we can maintain the 71.89, I don't really see any problem with talking to Chuck, Charles Schwab, rather. And if we really stay above this 50, the 70.78, this 50%, then I'm still a buyer, because I mean we did break out and then we got rejected, right? So it's kind of like textbook breakout, fake out a little bit, get rejected. Let's see some footing and then rebuy and see if the momentum can get us up to this 78.04. Let's talk to Northern Trust. Again, this is our little Powell move right here. Monday got destroyed. However, look where we are. It didn't really do much, right? So this is what, Wednesday, Thursday, Friday of the Powell move, I would say. And then we're really just right. We're above this 127. So as long as we stay above this 127 right here, it is bullish with the eventual target of the 61618, which would be 2436, give or take. Again, I don't see anything that's really scary besides we have a dividend risk coming out on September 9th. To keep that in mind, that we probably will drop due to the dividend risk, but just keep that in mind. It's almost it's out there. It's for everyone to see. Just don't forget it, right? But once we get past the 70-cent dividend risk, then I wouldn't be surprised for us to find our next chapter higher, as long as nothing too sporadic comes in the market. Now, I'm not, like I said, I wouldn't be surprised if a market kind of comes in this week or the next few weeks, as September is coming. In September, we've had negative, ugly months before, years prior. So just remember that, keep that in mind, that we could fall off a cliff just as a minor correction. And at that point in time, get back in. Here we go. FAS. We hit target. Of course, it didn't hit target when I wanted it to. I wanted it to hit target here, but I was $1.50 off. So I can't really scream too much and throw a temper tantrum as much as I would like to, because it did basically do exactly what it was supposed to. As long as we stay above really the 618 right here, and even better, the larger trend right here, the 786, which would be around the 117, 118 level, I still see extremely bullish. But as we do know with FAS, is that it has some nasty drops. So it could potentially drop below the 115 and get us down to this 110 area, which would be the 618 of the larger trend. So just keep that in mind. Even at the 618 area of the larger trend, 110 is, in my book, as long as it can kind of, because let's give us a line so you understand what I'm talking about. This level, my little gray line or teal line right here, is more of the level I would see that some support would come, as we see the support right here. But it is very capable to go down to the 110 level. So just keep that in mind, like I said. Blackstone is just amazing. The whole world should have just bet right here at 108, right, on August 19th, because nothing is going down. This is just beautiful. Now we have literally reached this the secondary target, so just keep that in mind. Coming back down all the way to the 121 would make sense. Let's give ourselves a Fibonacci real quick, kind of see where we could be going. All right, yeah, so even all the way down to the 119 level. So I was saying right up here around the 121. But after looking at the 50%, even down to the 119, we're still in bullish territory. I wouldn't like it to go all the way that low, but it very much well could go down to 119. But I kind of see the 618 as being a more of a buffer zone. So anywhere between the 22, 21 area, not quite all the way down below the 120, but close to it. I see us pulling back into that. And then for another leg higher. CME group is just, what a laggard. What a just a dummy, right? This is just terrible. It looked promising back on the 19th of July. And since then, since we hit this 50% mark, we have just basically been selling off, which is, I don't know. We have our dividend risk coming pretty soon, so keep that in mind. What did we do on earnings? Okay, so we beat on earnings, but not really. By 5 cents, which is still a beat. So I can't say no. It's still a beat, but I don't see where we see. Let's give ourselves some support areas, just kind of like right there. Right there. So our next little support area, I'd say the 193 area. And if we can't hold that, then look out below. We had a nice single print right here. We kind of corrected it already twice. So I don't see why, I don't see us coming all the way down to the 181, but it's very probable that it could happen. So just keep that in mind, as we do have dividend risk coming on the 9th. Mr. Price, T. Rowe Price. Uh, I mean, we're right at highs. We're at the longer term starting 621. We're at that target. Um, I do see us coming back down maybe to our short term 786, maybe even down to this 100% at the 212, anywhere between like the 214, 212. I would be a buyer around that area, depending on the market. Obviously, if the market's gonna have a nasty correction, then I wouldn't want to be I wouldn't want to be holding the bag, if for to make that sense. We have dividend risk coming out with not this week, the next week. So just keep that in mind. $1 dividend risk coming out soon. Goldman Sachs. I mean, it's we're right at highs. We hit the 420, which is beautiful. Um, Again, I see us if I see it's kind of coming back down to maybe the larger term right here, 786, which would give us about the 403. Goldman Sachs is just like FAS. Do not forget, these could have drastic moves in 1 week. Like in 1 week, we literally could go from 411 to 395 without really a blink in the eye. So just keep that in mind. If the overall market is starting to crumble, give ourselves a small correction. I'm not looking at like a 20% correction, but maybe even as much as like a 5 to 7% correction, which would just be unheard of in this market. But I do see maybe a 5 to 7% correction in the market. If that happens, then I see us coming all the way down to this 100%, 50% mark, right? 50% of this and 100% of the larger term, which would bring us down into the 495 area. Just remember, it could all the way go down to this 82, 382, and still technically be in a bullish scenario. We had dividends come out last week. It didn't really affect much, so don't worry about that. So our next big issue would be our earnings. Now, BlackRock. I mean, damn. Damn, it hit target 100%. It hit it and of the extension, and then kind of peeled from there. But wow, what a beautiful, beautiful move. Um, I see it's coming down to 23. Uh, Again, BlackRock, I mean, it's a $900 stock, basically $1,000 stock. Well, not anymore. $937 stock. So just keep in mind, um, a 1% move is a little bit over $9. So a 2% move from here gets us basically down to almost 900. Oh, well, not quite. It gets us down to right around here, the 910 area. Um, 910, 97 area. So just keep that in mind. I don't see anything wrong with BlackRock in the larger term, but in the short term, it could be a short term correction. Um, I'd like to kind of check the next few days. Don't forget we did have dividend risk on Friday, on the 993. So just keep that in mind. So our next big target in the way would be our earnings risk. That's our next big scare coming up. So just keep that in mind. But I see it's kind of coming down, maybe to right around this area right here, the 422, 426 area. At the lowest, about, 926, 922. In the lower region, I see maybe 920, 914, and at that point, I'd be a buyer.